Hey everyone, welcome to the 13th TD Ameritrade portfolio update. The portfolio is currently sitting at $4,669.74. The market has absolutely dumped this week for multiple reasons. We had Jerome Powell speaking on, I believe it was Tuesday and Wednesday, and then we had non-farm payroll come out Friday, as well as the second biggest bank collapse in U.S. history also happened this week on Friday. So absolutely terrible economic news. But we're very much so staying afloat, especially compared to the S&P. We're going to look at a chart here of the S&P 500 for the week. This is the daily chart, and you can see that since the last video I made, we have tumbled. So we ended the last, I believe the last video was right at the close of this candle, and you can see since the last video, the S&P has fallen 4.5% in a single week, which is, I believe, the worst trading week in the S&P since June of last year. So we've had this incredible rally through January, and now we have absolutely dumped tons of money here. So we went from $404 per share all the way down to $385, which is absolutely insane. And let me tell you, I was very good this week about hedging my delta and just hedging my downside, and I came out barely negative this week by maybe 1%, if even that. I don't even think it was 1%. It might have been 0.5%, whereas SPY, as you can see, has dropped 4.5%. So let's go over all of that right now. So to start off, here's the P&L chart. You can see the blue line is if I invested all my money in the S&P. The red line is me. You can see since the last week, I'm actually up about $5, I believe, since the last video. I want to say, could be wrong on that. Actually, I believe I might be down a little bit. Let me check on that, actually, if we just go to the YouTube channel. Yeah, we are actually down about $24 since the last video. So only down $24, whereas if we invested in SPY, we would be down probably around $200 something, if not more. So that is very good. So you can see we're destroying the S&P 500 this week. And now we're just going to go over my current positions. So I'm currently holding a call credit spread expiring April 6th. And this was actually the top half of an iron condor, which I ended up closing the put leg on this week. So we'll go into that in a little bit. I also have a call credit spread for the 24th of March at the 421.419 strike, which is the other half of the iron condor for this put credit spread here that you can see. And then I also opened another brand new call credit spread here at the 412.410 strike expiring on the 24th of March. So these are all of my positions currently. Let's go over the transaction history. So we got this JEPI dividend. That was kind of part of the last video. But past that, I sold all of my JEPI right when Jerome Powell started speaking. So earlier this week, Jerome Powell started speaking, and as soon as he started speaking, the market started dumping. So I sold all of my shares at 54 or 53.92. If we look at JEPI's price right now, you can see it's at 52.13. So I saved about $1.80 per share on that. So we would have lost roughly $130 had I held this. So I ended up selling all that. I sold my Google share at a loss. I sold my Labu share that I bought last week at a slight loss, and actually I ended up selling more puts. So you might have remembered I ended up opening cash secured put on Labu last week, and if we look at Labu's price, we opened a cash secured put at the $5.50 strike price. So you might be wondering, how am I not down, $55 from this play? And I'll explain why in a moment, but I will say that I ended up opening an additional 2 Labu puts at the 550 strike for only $2 a credit, which is very minuscule. I also started selling puts on TQQQ, which I think will be a great, long-term wheeling stock for me. So I ended up selling a put on both of those on the 8th. On the 9th, I ended up having to buy back all 3 of my Labu puts, 1 for a net gain of 0, and 2 for a loss of $6 total. So we only ended up losing $6 on this, which we absolutely averted a total catastrophe here. You can see I would have lost about $165 had I held these through expiration. So we averted something that could have been really bad there. I also ended up buying back the put leg of one of my iron condors. This was the weekly iron condor. Glad I did that. So we ended up buying that back. This would have, I believe, been, let's check here. Oh, it would not have been in the money, but by less than 1/4%. So that's not really a kind of risk I want to take. So I ended up buying that leg back on the iron condor. I also ended up buying back the March 24, or sorry, yeah, I bought back the April 6 put leg of the iron condor I had opened to hedge my delta. To further hedge my delta to the downside, I ended up selling another call credit spread expiring March 24th for about $18 in premium. And finally, I had 2 options expire completely worthless, which was the call credit side of the iron condor, whose put side I closed at a loss. So, all that being said, let's take a look here. You can see these are all currently open positions. However, the put side of this is currently closed. But this iron condor is still fully open, and this call credit spread is still fully open. If we go over here, this iron condor, I actually did not update this part of the spreadsheet yet, which I need to do. We ended up with a loss of $6 on it, but knowing that the market dropped 5% in 1 week, which, like I said, absolutely unheard of. Getting out with only a $6 loss is like getting out with barely any kind of loss. So I'm actually very happy with that, even though, of course, it is a loss. Continuing on to the wheel section, you can see I ended up closing that TQQQ put for a loss of $5, which once again, this one would have actually expired worthless, but taking on a risk like that would have been just against my risk tolerance. So I'm glad I closed that out. Tiny little loss here and a tiny loss on Labu. So it was all just lessons learned. I ended up improving all of my trading rules to fit this new kind of market, this very volatile market, and I think this will help me in the future. Past that, as I said, I closed my JEPI for a total loss, including dividends, of $13. Not bad at all. Totally fine. I avoided $150 in loss, so I'm very happy about that. If we go down to the month of March, you can see we're still up 2% on premiums alone in terms of passive income, which is very good. March is looking very solid so far, even with everything that's going on. Past that, I believe that's everything. If we look, let's see, I have a lot of notes all over the place on this document. Oh yeah, here's the trading plan. So actually I can X this out, but this is kind of just my trading plan going forward. So next Tuesday we have a CPI report, and then next Wednesday we have a PPI report. As soon as the PPI report settles in by about 12, I'm going to sell some puts that expire that same Friday. And I'm also going to open a credit spread expiring that next Monday, depending on the reaction to PPI. So I'm going to be opening some new positions next Wednesday, expiring Friday and Monday. From there, the week after that, we have FOMC, which is going to be pretty significant. And after that goes through, waiting for the reaction on that, I'm going to end up selling puts for that same Friday and selling a credit spread for that next Tuesday. Next Monday, I'm also going to open some puts for that same Friday, because this is a week that has no economic events, which is really great. And also, one thing I want to add here is that as you know, I traded during this entire week, which had tons of economic events. And so I figured out that my economic indicator, which I use on TradingView, basically what I use to know if there's any economic events, it turns out this indicator is actually incorrect. So that is why I have somehow managed to run into economic events. Every now and then I'll trade thinking there's going to be no events, and then suddenly it appears that there's this huge market moving event that I had no idea about. It turns out my indicator does not work correctly, so gonna have to stop using the indicator and actually look on things like Market Watch. The events I'm avoiding are CPI, PPI, non-farm payroll, FOMC, and Jerome Powell's testifying or speaking. So any kind of events like that I consider significant enough to avoid. As you can see, I have all the upcoming ones charted on here. But yeah, so aside from that, next week, or I guess this week rather, is going to be very big for the markets. We'll see what they raise the interest rates by. The market could go down a lot more, or the market could stay neutral or go up a ton. So like I said, I mean, it could go in any direction really, depending on how CPI comes out and then PPI. But I will be trading this week on the latter half of this week. And yeah, I'll make another update video and let you guys know how it goes. See you in the next video.